Hi, we are Group 4. Today our presentation is about the Harvard Group. Uh, our group has a five members that are Khánh Trường, Minh Hiếu, Tú Anh, Sĩ Thành, and Nhật Minh. This is our outlines. Um, and first, I will talk about this general information. Harvard is a leading industrial production group in Vietnam. Harvard initially began as a business that traded construction equipment. Then it's diversified into other industries, including furniture, steel pipe. Um, now let's turn to the second part of my talk, which is about Harvard Independent External Audit Firm. Harvard Group's joint stock company utilize the centralized management model and perform the holding, capital management, strategic business orientation, and support for supply risk growth. Harvard Steel Company bought stock in six other businesses and changed its name to Harvard Group (JSC). Um, the business used a contemporary governance style and complies with accounting and auditing regulations for public corporations. Uh, Now, I would like to look at as the company's primary line of business. The group now engage in five fields: steel items made of iron and steel, real estate and agriculture, residential property, and home furnishing. The core business, which generates 90% of the group sales and profits, is its manufacturing of steel. Harvard is the biggest manufacturer of steel in South Asia, with an annual capacity of 8 million tons of crude steel. Let's turn to the next issues. Ticker symbol of the company and company stock exchange information. The Harvard stock symbol or stock ticker is Harvard Group, and this company traded on the Ho Chi Minh City Stock Exchange. Holds Harvard Chartered Capital had worth 33.8 times more than its original public offering in 2007 after 14 years of listing on hold. Its market value on the stock exchange exceeds $10 billion, ranking it among the top five shares with the highest market capitalization. This is the board of directors of Harvard. Uh, uh, we come to the next point, which is this majority or subsidiary of the company. As I mentioned before, working is the five field and they have 11 subsidiaries. The company's primary activity was in the iron and steel sector, and the subsidiaries in that area contribute 80, 84% of revenue and 82% of after-tax profit in 2020 for the company. Moreover, the company in the agriculture industries also made significant strides, growing at a pace of 32% in 2020. Finally, I would like to change direction and talk about the size of the company. Harvard, uh, Harvard Steel Pipe has six factories in all three regions with hundreds of pipe bending lines, five production lines for hot dip galvan- galvanized pipe, 11 product lines for galvanized still exists. Uh, design design capacity of own factory reached 1 million ton over years. Now I will talk about the trend in total current assets. Uh, the total current assets of Harvard experienced a significant rise from 2019 to 2021. In 2019, Harvard current assets reached uh, 30,436 billion Vietnam dong, accounting for 29.91% of the total asset. In the following year, the current asset increased by 86.4%, hitting 56,747 billion Vietnam dong and accounting for 43.15% of total assets. Fast current assets continue its rapid increase by 67.9% in 2021, reaching uh, reaching 94,154 billion Vietnam dong. Such a rapid growth in current assets during the three-year period were mainly due to significant surplus in cash and short-term investment. Uh, we will come to the next point, the trend in total non-current assets. And for non-current assets, its accounted percentage in total assets has decreased due to the rise of current assets, which account for 70% of 2019 and only 47.17% in 2021. Nevertheless, the value of long-term assets keep increasing steadily year over year from uh, 71,000 um, 71,000 billion Vietnam dong in 2019 to uh, 84 uh, billion Vietnam dong in 2021. This mainly comes from the notes receivable from the previous year, with the proportion trend being uh, 1,000% and uh, 165% in the last 2 years, respectively. Furthermore, in 2021, the fast long-term investment reached a negative growth when the percentage trend reached um, uh, 24.57%. Overall, the total assets has grown significantly.
Thanks to introduce me. Now we move to the changes in total liabilities and equity. And the amount of total current liability in Harvard Group grew gradually from 2019 to 2021. In 2019, Harvard current liability was the 26,984 billion, accounting for the over 26% of liability and shareholder equity. And in the next 2 years, the current liabilities keep increasingly, reaching over 92% in ranging from the 2019 to 2020, especially in 3 year the long-term liability was the negative with negative 24.67% between 2019 and 2020 and negative over 30 in 2021 and 2020. Yeah, thus It can be seen easily that Harvard was able to adapt with the amount of current liabilities and total equity. The amount of total equity experienced significant fluctuation over 3-year period, reaching at over 90 billions in 2021. This means that the firm still had depended on the liability. Now I want to compare between the Hoa Group and Hoa Group. The current asset of both companies has an upward trend over 3-year period. In 2019, Hoa Group experienced a significant increase from the 29.91% to 52.83%. Besides that, the portion of Hoa Group also rose from the 42.70% to the 70.08% over the same time period. So we can see that both firms had a quite strong asset to adapt the short investment and prevent firms from the incidental risks. Besides, the long-term asset of Hoa and Hoa decreased gradually from 2019 to 2021 at both tables, indicating that a part of the long-term assets was being converted into the current asset to adapt with the market requirement. Furthermore, it can be ensured that the maintain of stockholder interest thanks to investment from the long-term assets. And in terms of liability and equity, Hoa Group and Hoa Group generally, Hoa Group had total equity accounted for the highest portion in 3 years, while Hoa Group had a total current liability maker, the higher percentage than the others. This shows that Hoa has the effective investment to the maximize profit. In Hoa Group, the proportion of liability was clearly greater than total equity almost all 3 years, while in 2021, the percentage of Hoa Group equity was larger than the total liabilities. It can be illustrated that in the capital structure, Hoa Group debt was higher than that the Hoa Group, and Hoa Group equity was bigger than that of Hoa Group. And next will be presented by Minh Hiếu.
So hello, my name is Hiếu. I'm from Group 4, and I will be presenting Hoa income statements, and then after that I will be comparing Hoa and Hoa Group. So first let's take a look at the income statement. So the income statement specifically from 2019 to 2021, this income statement includes operating revenue, cost of goods sold, expenses, non-operating gains and losses, and finally earning per share. So as you can see in this table, Hoa operating revenue from 2019 increased over 100%, resulting at ending at 150 billion Vietnam dong in 2021. So it seems like that COVID-19 and the new normal of Vietnam has a little effects on the growth rate of Hoa company, Hoa revenue. So in 2020, the amount of steel supplied to the domestic and the foreign markets reached 1.7 million tons, which is 12 times higher than in 2019. As a result of it, in 2020, the percentage change in the operating revenue was 41% from 64 billion to up to 91 billion. So additionally, due to the introduce of the hot rolled coalie, or known as the HRC, which was launched in April 2020, after the blast furnace number 3 was put into operations, Pafat's HRC orders had increased sharply, outstripping the company's supplies capacity. So now the next part will be the cost of goods sold. So the cost of goods sold accounts for the majority of the operating revenue. And from 2019 to 2021, cost of goods sold it's increased over 100% from 52 billion Vietnam dong to over 108 billion Vietnam dong. The increase in the revenue is the main reason for the increase in the cost of goods sold. So when the revenue soared 65% from 2020 to 2021, cost of goods sold also increased up to 52%. Another reason for the significant high rise is that the high cost import or iron ore in 2019, making cost of goods sold account for 88% in the total revenue. So next, we'll be talking about the total expense. So the total expenses consists of 3 main parts, which is financial expense, selling expense, and finally operating expense. So Pafat's total expense account for only 4% of the total revenue in 2019 and increased to 4.75% in 2021. And the financial expense account the most in the total expense, and the majority of them are loan interests. And so which means that Pafat has been borrowing money from banks to build facilities and factories to meet the market demand. So there were not lots of change in both selling expenses and operating expenses. On the other hand, financial expense increased from 1.8% up to 3.1% in 2020, and then dropped to only about 2.2% in 2021. About non-operating gains and losses, so it has slight decrease from 2019 to 2020, and then both soared in 2021. Non-operating loss increased nearly 27%, while the non-operating gains increased only 21%. So in 2020, the non-operating activities still have a positive contributions to the total revenue, but the impact has decreased compared to other 2 years, which is 2019 and 2020. Finally, the earning per share has the most impressive increase from the 2020 to 2021. EPS in 2021 nearly tripled from 2019. And this is the result of the company achieving its growth goal earlier than expected. So next, we'll be talking about the comparison between Pafat's and Hoa Sang Group common side income statement. So first, let's talk about the operating revenue. So it's clearly seen that Pafat's has a way much higher operating revenue than Hoa Sang Group. But overall, both of the companies increased in the total operating revenue in from 2019 to 2021. Hoa Sang Group has a slight decrease from 2019 to 2020, and then nearly doubling in 2021. On the other hand, Pafat's continue its uptrend and grow approximately 130%. So in general, it's obvious that Pafat's total revenue is always tripled the value of Hoa Sang Group in all 3 given years, and it also indicates that Pafat has a more stable and significant development than Hoa Sang Group. So next, we'll be talking about the cost of goods sold of each company. So yeah, the graphs shows the percentage of cost of goods sold compared to the total revenue. So despite the remarkable increase from both company revenue, the cost of goods sold experienced a slight decrease in the percentage of cost of goods sold, which is a good thing. Hoa Sen Group cost of goods sold account for around 88% of the total revenue in 2019 and decreased to approximately 81% in 2021. Hoa Phát Group cost of goods sold dropped from 81% to nearly 72%. And this can be explained by the selling expenses of Hoa Sen Group taking the majority of the total expenses, which means that they are likely to sell more products, while Hoa Phát Group has more percentage in other other segments, such as investment, for example. So next we'll be talking about the expenses. So as I said before, expenses includes selling expenses, financial expenses, and finally operating expenses. So the chart reveals that the total expense of Hoa Sen Group is always higher than Hoa Phát Group when comparing in percentage. So, but both companies fluctuated from 2019 to 2020. However, while Hoa Sen has a slight decrease from the 3 given years, Hoa Phát experienced an increase from 2019 to 2021 from 4.06 to 4.75%, while Hoa Sen Group decreased from 10.7 to only 8.8%. Furthermore, the majority of the expense of Hoa Phát Group belongs to financial expenses. In the case of Hoa Sen Group, selling expense accounts for the most of the total expenses. So it is concluded that Hoa Sen Group is trying to sell more products, and while Hoa Phát is focusing on investing and building facilities. So about the non-operating gains, in general, both company face a downtrend in the non-operating gains. Hoa Phát Group declined by half from 1.02 to 0.53%. Hoa Sen Group experienced a deeper fall from 0.9% to only about 0.03%. And about the non-operating losses, both companies also experienced a decrease. However, in the case of Hoa Sen Group, we can see the companies slightly fluctuated from 2019 to 2020. And finally is the earning per share. So both companies witnesses a significant increase in the company earning per share. Hoa Phát Group has a more steady rise from 2019 to 2020, and on the other hand, Hoa Sen Group soared remarkably from 0.8 Vietnam dong up to 9.173 Vietnam dong due to the spike in the total revenue. And Hoa Sen Group's earning per share, as you can see, it has surpassed the Hoa Phát Group earning per shares in 2021 with the differences of 0.543% Vietnam dong. And that is pretty much the end of my presentation. Thank you for listening.
Hi, my name is Thanh Tường, and I will talk about the first part ratio analysis. As you know, the current ratio in outcome of how company is doing financially. Look at Hoa Phát in 2019. The current ratio is 1.128. This is a healthy current ratio, which means that the company is well-run and very successful, while Hoa Sen at that time is too low, which means they need further investigation. And perhaps it is taking on too much debt or its cash balance is being depleted. On the other hand, in 2020 and 2021, the trend of Hoa Phát and Hoa Sen is positive and more than one, which means that they are capable of paying their short-term obligations and both companies are working well. The second figure shows that both companies which are Hoa Phát and Hoa Sen have the quick ratio less than 1 in 3 years. Therefore, the company may not be able to pay up their current obligation by using only quick access. However, the trend of both companies is positive and the quick ratio of Hoa Phát is close to 1. Hoa Phát appears to be in better short-term financial health with respect to being able to make its short-term debt requirement. Both companies should increase marketing, manage the current liability in the denominator of quick ratio, and keep them low will put the business in better positions. And the third graph demonstrates on the and as demonstrated on the chart, the total debt ratio of Hoa Phát and Hoa Sen is below 1. This means a greater portion of a company asset is funded by equity. The trend of both companies is decreased, and the number of Hoa Sen has changed more obviously than Hoa Phát, which means Hoa Sen takes stringent financial control measures. However, in 2021, the total debt ratio of Hoa Phát is 0.492, and we cannot understand that the business has a good financial foundation and long-term potential. The bar chart illustrates the debt-to-equity ratio of Hoa Phát and Hoa Sen in 3 years. On the surface, it appears that Hoa Sen in 2019 higher leverage ratio indicates higher risks. In the following years, the debt-equity ratio of Hoa Sen dropped sharply from 2.154 to 1.461. This shows that the company is gradually overcoming debts and focusing on business. However, the ratio is still high and it could be considered risky. The debt-to-equity ratio of Hoa Phát Group in 2021 is strictly controlled and it declined from 1.167 to 0.967. This debt-equity ratio is very low compared to Hoa Sen Group. The debt ratio is very high to reduce the burden to provide good system operability, demonstrating that the company's financial policy and capability are always responsible and careful managed. And that's the end of my presentation. Next we will continue. Thanks for listening.
Moving on to inventory turnover. As you can see here, throughout the period, Hoa Sen has a higher inventory turnover than Hoa Phát, which means that Hoa Sen is more efficient at managing and selling the inventory. However, the trend for Hoa Sen is going downward and Hoa Phát remains consistent. Next is the total access turnover. And also in this period, we can also see that Hoa Sen has a higher total access turnover than Hoa Phát. This indicates Hoa Sen is better at using access to generate profit, to generate revenue than Hoa Phát. However, this doesn't mean that Hoa Sen is better at making a profit than Hoa Phát. This is reflected to the profit margin. In this period, Hoa Phát has a much more higher profit margin than Hoa Sen. And when you compare to the average industry in 2021, Hoa Phát has a 23% of profit margin, while the average industry has just 2.94% of profit margin. This is also a key insight for investor and for lender and investors to invest in the company. Next is the return on assets. In this period, Hoa Phát and Hoa Sen also have the trend to go upward. In 2021, Hoa Phát has a 90% of return on assets, which is much higher than Hoa Sen and the average industry, which means that Hoa Phát has a better efficiency at using access to generate profit. The return on equity also set the same. However, in 2021, we see that Hoa Sen has a higher return on equity than Hoa Phát. This means two things. One is Hoa Sen is better at using equity to generate profit than Hoa Phát. Two is Paseng is using more financial leverage than Farfetch. Next is the PE ratio. The trend of Paseng is downward, and the trend of Farfetch is fluctuate in this period. In 2021, we see that Farfetch has a higher PE ratio than Paseng and the average industry. This means the investor are expect higher growth from the company in the future. Next is the PP ratio. The PP ratio of Farfetch and Paseng in this period have the trend to go upward. And in 2021, we see that Farfetch has higher PP ratio than Paseng and the average industry. This also indicates that investor expect higher return from the company in the future. So in conclusion, the Farfetch is in a stable financial condition. Their liquidity is able to pay off current liabilities. Their long-term solvency, particularly the DE ratio, is at a acceptable level. The DE ratio in 2021 is smaller than 1, which means that they have higher percentage of equity than debt. The managing efficiency of the company is relatively low. However, they remain consistent throughout the years. The profitability is high, reflects to the all return on assets and return on equity, and high market value, which indicate that investors are expecting higher growth from the company in the future. And that is our presentation. Thank you for listening.